Hey everyone, Mark from Avalaunch here, and today we are joined by the Arrow Market team. This is a team that we've known for a long time now. They have a long history in Avalaunch, and we've always been super, super excited about what they're building, watching it closely. It's come a long way. Really, really excited to kind of get into the weeds with it, try and cover as much as we can here today. So thanks a lot. Thanks a lot for joining us, guys. Right on. Before we go further, just let's start with the basics. Maybe we could just kind of go around quick intros and tell us what you work on within Arrow and how long you've been working on the project.
Sure.
Sounds good. I'll kick it off.
Do it.
Yeah, thanks for having us, Mark. Obviously, been in contact with you since kind of the beginning, so it's exciting to kind of have this opportunity to bring you up to speed.
Sure.
So I'm Patrick Kiefer, co-founder, along with Ed, of Arrow. We both have academic backgrounds. I did my PhD in finance at UCLA. Spent a couple years in the private sector, and then kind of came over to blockchain about 2.5 years ago at IC3 conference at Cornell, where Ed and I kind of put together the preliminary ingredients for the ideas of Arrow. And so kind of, my role at Arrow is to contribute to a lot of the kind of technical and economic designs. It's been very exciting. I think this is a very kind of exciting space to be working in. And so that's just, a very brief kind of background about me.
Yeah, thanks. What about you, Ed?
Thanks, Mark, for having us on. It's a really great opportunity, and also to speak to the whole Avalaunch community. So I, like Patrick was saying, known each other for a while. Dheeraj and I actually also met at Cornell, and this is where that whole Cornell connection comes from, where the Avalaunch connection, all that stuff as well. But we had actually taken the Eamon Gunsir's course, PhD course, the one and only time that he taught it on blockchain before he left. And so that really sparked a lot of interest, I think, for all of us on what was going on in the space, the technology that was coming through, how even high performance, computing was becoming a possibility for blockchain. We're still far from that, but I think we saw the potential at that point. So yeah, my background is also I was doing my econ PhD at Cornell, focusing on finance and artificial intelligence. In terms of Arrow, I contribute mostly on the quantitative side, also on the business side, but a lot of exciting stuff that we're building, and I'm looking forward to digging into it today with you.
Right on.
Yeah. When I met Ed at Cornell, I was studying for my bachelor's and master's in computer science and mathematics at Cornell. I was really interested in distributed systems and programming languages. And Goon's class was amazing because I got to see blockchain consensus and that side of blockchain technology. So that's what got me really interested in terms of the blockchain system side of things. Here at Arrow, I've been here over a year now, heading product. I'm really excited about building a beautiful, intuitive user experience that can hopefully introduce a whole new generation of option traders into DeFi, and a whole new generation of DeFi traders into options.
Yeah. It's cool, and that's definitely one of the things I want to cover today. In addition to just learning about the project and and what it is, also just the implications, right, of what's happening here, and what opening this up looks like, right, and what where do we go from there as well? And so probably a good point to explore here is just the protocol at a high level, but then also kind of more nuanced too. And what I mean by that is, maybe you could just talk about what Arrow is, but also, what bringing this on chain kind of means. What advantages does it confer, and why is this important?
Yeah, that's a great question. Let me just kind of take a stab at it at a high level and then kind of pass it off. I think one of the things that's really interesting, one of the things we discovered, as we were building this out, the number of kind of institutional layers it takes to implement an options trade in traditional finance is extraordinarily, broad. There's a lot of inefficiencies there. Now, sometimes, there are lessons to be learned from existing institutions. A lot of that structure is kind of there for a reason. So you don't want to kind of completely disregard all of that and say, hey, this is all a waste. There are lessons to be learned there, but it's still possible to simplify that infrastructure to an extraordinary degree. And that's really what we've been focusing in on Arrow. And if you look at kind of the complexity of our platform and what it takes to implement an options trade, if you just kind of walk through that circuit and then compare it to what it takes to implement an options trade in traditional finance, it's just so much simpler on Arrow. And so this was very striking to us. Of course, in addition to that, all of these transactions, all of these contracts are, since they're on chain, it's completely transparent. There aren't kind of intermediaries that you can't observe what they're doing. But I really do think kind of reducing this very, very complex circuit to something simple, something kind of easy to debug is very powerful. And so that's what we've done.
For sure. Did anyone else have anything else on that?
Just adding to the levels of complexity, like Patrick said, it is interesting how having a layer one like Avalaunch can enable you to cut away a lot of the excess that happened through this kind of piecemeal financial system that we're currently dealing with. Now, that doesn't mean that all of the things that are there are completely unnecessary. So I think, like Patrick was saying, there's a lot of lessons to be learned from traditional financial systems. And I see that propagating through DeFi and through crypto in general now. So it's nice to see that people are appreciating that.
Mm-hmm.
But it's having the infrastructure there of, really fast confirmed transactions. Just that in itself is so important, because if you go to the back office of a lot of financial institutions nowadays, there's a whole teams of people just trying to make sure that assets have been transferred, that they've been settled, et cetera, et cetera. And this is something that's transparent by construction on layer ones. So yeah, super interesting how even what you'd think just conceptually is a small thing, even that can have these ripple effects to more complicated financial products.
Mm-hmm. Mm-hmm.
When it comes to the blockchain and the way DeFi is currently being built, permissionlessness is a big benefit that um, that these projects bring. So for Arrow, we are democratizing both options trading and options market making. So we've been building this for over a year now, and we've spoken to so many option traders all over the world. And what we've realized is options trading, the way it took off in the United States,
Mm-hmm.
hasn't been replicated in the rest of the world because of the lack of user-friendly platforms, because of the lack of awareness. So that's something that we're excited about, bringing Arrow to the rest of the world, bringing options trading to the rest of the world. And similarly, being a permissionless protocol for market making, we hope to democratize the returns to options market making to anybody who's interested in participating in the platform.
Yeah. Yeah, I mean, you said two things there that I think are just really interesting and very, very cool. On one hand, options trading, particularly in the U.S., has become more popular, but at the same time, it is still this area of finance from a retail perspective. It's not as easy as buying stocks on Robinhood or whatever. It's still, I think, by and large, feels inaccessible to a lot of people, and so I think one of the things that DeFi is really good at is opening people up to concepts and saying, what, no, this is for you too, right? But what's even more interesting here is how you're providing access to different parts of the system that they would have never have had access to, right? When you're talking about liquidity provision and underwriting and backstopping, absolutely not, right? And so you're putting the whole system in here for everyone to kind of engage in and benefit from. It's just it's a very, very cool thing. And as you guys have been working on this for a long time, and as you mentioned, even been involved in Avalaunch for a long time. I always mention it to you guys just because I think it's neat. But when we started Avalaunch, we were looking at the ecosystem and saying, okay, where is this going? What's happening? Arrow was one of the first things that we saw, and you guys have been here since the very beginning, and I think it affords you a unique perspective on a couple of things, namely Avalaunch just in general, right? Because you've watched it evolve very closely in relation to your own work and how it's going to apply, but also just DeFi and these other options platforms that have come and hit the market while you have been working on Arrow. And so I want to talk about both of those things, really, kind of starting with Avalaunch. And so I think I have a sense of what brought you to Avalaunch, right? You actually took Kuhn's course and probably bought in pretty early there. But maybe there's more to it than that. But as you've been involved in the ecosystem and watched the community mature and the technology mature over the last couple of years, is there anything that has surprised you? Is there anything about Arrows that's changed as a result of how far the ecosystem has come relative to when you really first started working on this project as an Avalaunch native protocol?
I'll just say something really quick about the Avalaunch community and then pass it off. I remember, early on when we first started, talking to everyone, there was this real sense of kind of community and everyone was willing to kind of help each other. And I remember we had these discussions and we were thinking, you know what, I don't know if this is going to last. Like, are the knives going to come out in a bear market? Is it true that this community is going to stay coherent through the ups and downs? And it really has. And it's really been something to see. So I'll just kind of comment on that observation. But maybe, Ed or Dheeraj will have something deeper to say about the Avalaunch connection. Mm-hmm.
It's been great to be around and see how Avalaunch has evolved. And I actually remember when Avalaunch was marketing itself as the Internet of Finance. And then it broadened out to include other things like, NFTs and gaming. And I think they, as of recently, they're coming back to finance as well. I think you need a lot of different components for a layer one in order to be successful. So that's one of the most interesting things, in my opinion, is just to see it branching out. At the very beginning, my prior was, okay, this is going to be more DeFi focused, but then as these other use cases for blockchain started to branch out and really take off, then they also saw the power. People who were building NFT platforms or gaming platforms saw how much more efficient it was compared to something like Ethereum. and that it had the same tooling in terms of programming. So that's been really interesting to see. It's very cool to go to to things like the Avalaunch Summit
Yeah.
or some of these conferences, and be talking about crabs, for example, and that is and one of our engineers, one of our quants actually, was so into getting the crabs on Kavada and growing them and all this stuff. So it was fun to talk about that as well. But yeah, that's been something about the evolution that is pretty, I'd say it's pretty unique.
Yeah. Yeah.
You know,
It's also been very nice to see derivatives take off in the course of the time that we've been building Arrow. Like GMX has taken off, and perp trading in general has taken off. But it's also nice to see GMX go live on Avalanche.
Yeah. 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 And that leads me like pretty well into my next thought, which is, this is understandably, the research and the implementation is understandably taken some time, and I think you guys had a pretty early vision for on-chain options. And correct me if I'm wrong, but when this was originally kind of conceived, I don't think there was a lot of people doing this. But in the interim, right, a lot of options protocols have come to market. DeFi, is very, very strong. A lot of people experimenting and innovating, and so I wonder where that kind of leaves Arrow, right? And so, how does Arrow as an options protocol differentiate itself from things out there that might look like it, even though they're not, and just kind of the landscape that's become somewhat populated.
existed when we first, very nascently started with the seed of the idea. Hedging was one of them. It was the most prominent
Oh
one.
yeah.
This was one of the things that was really interesting because it contributed to our evolution as well, kind of seeing what was around, seeing the experiences that they were going through. And we saw some of this systemic this risk build up on the platform, where the LPs every so often would lose out, and they lose out in a big way. So we realized as we were developing that one of the most difficult things with options is that you're selling promises, and you have to be able to satisfy those promises, but at the same time, you don't want your LPs to get harmed too much, because in the interim, while these promises are kind of coming to fruition, a lot of things can happen in the underlying market that make it so that the liabilities towards the LPs build up, and they build up in a big way. So if you're not actively tracking that accumulating risk, then bad stuff can happen, essentially. And this is something that through conversations with market makers, through more research, we became acutely aware of in how this risk is controlled. So in creating something like a baseline options market maker that controls this risk and helps the LPs mitigate this risk, we saw the challenges that were involved. And the challenges here are really creating an integrated system where we're selling off these promises on behalf of the LPs, but at the same time, we're helping by hedging the risks in the underlying. So targeting it with respect to this moving exposure to the underlier. And options are such a interesting financial primitive, that they're so flexible. They can be used to replicate any type of financial payoff. It's really wild. So with that flexibility, though, also comes some behavior in how the option changes as that underlying asset evolves, and as it gets closer to expiration, as you change the strike, there's all sorts of ways that the risk changes. So we had two challenges there. One was to be able to come up with a system that helps mitigate these risks and controls them to help our LPs. The second was to help explain the product in a way that's easy to understand. So those two things have really been a guiding principle. But I'd say, you know, on in terms of the back end, yeah, that was one of the areas that we started to dig deeper, and we started to see, okay, what is this world of market making? What does it look like? What are the processes behind it? And it's very much it's a very hidden world. It's very profitable as well,
Yeah.
but it's
And
yeah.
and the ultimate goal is, it's to be able to provide users a system where they can trade options for various purposes. Just because how Ed was describing, options are so complex and varied, traders could use options to hedge some of their underlying positions. They could also use options to just gain leverage. Something that's very interesting about options, especially in the current times, is that if you are buying a long option or like a long call or long put,
Mm-hmm.
you you don't need to worry about liquidations because the leverage in the options is embedded into them. And this is why retail options trading has taken off, is because you can put in a small premium, and
Mm-hmm.
if, say, Avalanche were to go up by a lot, then you your option payoff multiplies your initial investment by a significant factor,
Mm-hmm.
without having to worry about liquidations. Of course, if the underlying asset does not go up, you could lose all your premium, but that's very different from the experience that a retail trader faces when they're trading perps.
Yeah. Yeah.
I,
Makes sense.
I like to say, using a very corny old infomercial line, that with options, by buying options, you can set it and forget it. Like,
It's like,
not
yeah.
really, you should watch it, but you know, I like to say at least you don't have to worry about getting liquidated. You know, the price, you can have total price action in the opposite direction of, let's say you have a call, which is a bet on the upside. You can have a total price variation on the downside that's like, oh, looks like this thing's going to tank, but I'm still confident. I'm super confident that, you know, a box is going to blow up in a couple months, right? And if I'm really that confident and I want to just hold it and see what happens, then I don't have to worry about getting liquidated on that down path. I can just wait and see if it increases on the upside. Now, of course, on the down path, the value of the option will decline. But if you really, you know, if you have strong conviction and you think it's going to go back up, at the end of the day, you will get a payoff, if that projection comes to fruition.
Right. Right. Yeah. I mean, so with something like leverage trading, like you can be right in the wrong time frame, right, and get wiped out. Um,
Exactly.
this is a variable that's very, very tricky for people. Just trading's hard.
Yeah.
Yeah.
I mean, timing will still be a very important issue when you're doing this with options.
Just in a
So you
different
can
way, right?
still mistime it. It's just that you won't get a margin call if you mistime
Yeah.
it.
Right.
Yeah.
Right. You're not necessarily penalized for getting it wrong in the same way.
Right.
And
Yeah.
You won't I mean, the terrible thing about getting a margin call is it eliminates your opportunity to
Right.
benefit from the, view you're trying to take. So if you think it's going to go up and then it goes down first, like Ed was saying, and you get margin called, now you no longer have the opportunity to benefit when it goes up. And with options, you don't have that. Yeah.
Right.
and
But
Risk
timing is
has to
still
be
important.
right by expiration, though. Yeah, I just
Yeah.
wanted to say that, Patrick. You have to be
Yeah.
right by expiration. That's the only time that, is going to be super important. So, yeah.
Yeah.
Right. But
and
getting it
the
wrong doesn't eliminate that future opportunity, right? And I just think that's an important distinction. I'm sorry. Go ahead, Dheeraj.
yeah yeah and the ultimate goal of the AMM is to be able to give users, be it whatever they're looking for leverage, for hedging, for any other sort of, um, like market making, a wide set of options to choose from without having the need to be matched with a counterparty, because that's one of the biggest problems with options is when you're looking to trade an option, there's many strikes and many expirations, and you have these strikes and expirations for both calls and puts. You could have like over 500 order books just for options on BTC, options on ETH, and this inherently fragments liquidity. And so in terms of the user experience, in terms of a trader trying to place an options trade, it's an arduous process, especially if you're trading small volume. And the benefits of an on-chain AMM is that the AMM can price these options for the user and allow them to trade options without having to find a seller of that option who is willing to like fill your limit order and so on.
Before we, I'm sorry, go ahead.
Yeah, let me just build on this quickly. I think this is actually an important point. So, just kind of leaning into what are some of the advantages of actually having options on chain. And I think composability is a big thing here. And in fact, we've mentioned this to you before, Mark, but our namesake, Kenneth Arrow, is an economist, Nobel laureate actually, who has a set of theorems showing that options are the fundamental building blocks for financial markets. And so a lot of these more sophisticated derivatives that you see traded can be built with certain portfolios of options. And so this is something that we think is important. And we've built out an SDK to encourage developers, other people who are thinking about what type of financial products can they build on chain. We want to give them access to these options to use them as these kind of primitive ingredients, these building blocks to construct payout profiles for their particular application. And so I think this is, our view is this is going to be important, particularly kind of over the medium term. And it's a very unique advantage of having the options on chain.
Yeah. It makes a lot of sense. I mean, it's obviously exciting for the health of the protocol as well. Building on that and more back to the platform specifically, like we've established that options are something that can be complex for people, and I think one of the opportunities that's that you guys are really kind of going after is simplifying this for your kind of everyday user, and I think in some ways you sort of have to. And so I want to go into what you guys are doing just in terms of a user experience and the application to kind of resolve this for people. And I know we have some collateral here that we can review as we talk through this.
Yeah, so this is our signature user flow for our user who is looking to leverage a forecast that they have in their mind. This was back when Avalaunch was a little lower. So a good rally in the last couple of days that you could have benefited from if you were on Arrow and if you wanted to be bullish and set a price forecast, we'd recommend a call or a call debit spread that would maximize the profit potential based on the forecast that you selected. So normally you'd have to go in to a slightly complicated options grid and know which strike you'd want to pick, and then an expiration, and then place a trade, and either do some mental math or use some calculators in your head.
Yeah.
But here, all you need to do is specify a forecast, and the option recommendation engine picks the option that is the best for your forecast.
Yeah. It looks amazing. And so when you're talking about forecast, this is just sort of whether you think the asset will go up or down.
Yep, that's pretty much it. And like a a specific price point or range that you think it will go to?
Yeah, I mean, this is incredible, because I think most people would be capable of clarifying their opinion, right? I think this is going to go up. I think this is going to go down. This is where I think it's going to go. And you guys have this kind of recommendation engine inside of that to present a user with some options, right? So they don't actually have to go back to this spreadsheet or necessarily even have a deep understanding of the math to start to engage with and understand this area of finance. I think it's very cool. It looks beautiful. I haven't seen anything that is kind of this good looking primarily, but also just sort of intuitive and feature rich. I think you guys have done a tremendous job with this, and how when I'm looking at this, and obviously we have Avalaunch and think a lot about user experience as well. How long did it take you to kind of get to this version of it, and how many kind of iterations did you go through? How long did it take you to arrive here?
Yeah, this is our second major iteration. I'd say we've worked on this for about 8 or 9 months, and that's how much time it took us. We have a great design team,
Yeah.
a UX researcher and a UI designer, both in Poland, and an illustrator as well. And they've come together to build just beautiful designs for our app. And we've done a lot of thinking, a lot of research to come to this flow, and we have many more flows, both developed and both in the pipeline, and a lot more refinements left to be done. But we are pretty happy about this particular flow. And then we're also excited about recommending different options for hedging and for shorting if you want to earn yield based on some forecasts you may have. You could sell covered calls if you think we're in a crab market. And so a lot more to come, and a lot more simplification of options and option strategies are going to be present on our app.
Yeah, it looks great.
Yeah.
I want to start going into kind of the underlying technology and architecture, and getting a bit more kind of in the weeds here. And so Arrow is built on what you guys kind of describe as like a dual pool architecture. I'm taking some liberties here, but that accounts for both the option creation and settlement. These are AMM pools and liquidity pools, and sort of common instruments in DeFi. And I'm hoping you guys can just kind of talk through the design and how these pools, what their purposes are, and how they interact with each other.
Yeah, I'll again take kind of a high level stab, and then we can iterate.
Sure.
So the two pools, we have a liquidity pool and we have a trading pool, and this kind of reflects one nice way to understand this delineation is in terms of the user types. So there are kind of two fundamental different types of users of Arrow. One is the liquidity providers and one is the trader. And so the liquidity providers, they're the users who capitalize this financing insurance pool or liquidity pool. And those funds are used to finance the hedges against the options that the traders create in the trading pool. So when the traders create an option in the trading pool, the AMM has to hedge that exposure because, like Ed was mentioning earlier, these options represent obligations for future payouts. And so we want to make sure that we can pay those obligations. And so the way to do that is basically to implement a replicating portfolio for the option. And that's what the trading pool does. The trading pool implements the replicating portfolios that hedge the option exposures created by the traders. But those replicating portfolios are financed using capital from the liquidity pool from what says financing and insurance pool on this slide. So that's kind of a high level breakdown of the role of these two pools.
Yeah, and what's important here is that the LPs are providing passive liquidity. It's not the same as LPs in a Uniswap sense. We don't have a constant function rule or anything like that, a constant product rule. What it is purely people are depositing these funds. We're transforming them into an active option creation or quoting strategy, and then providing them with the premiums and trading fees that are collected on our system, net of any hedging costs. So it's very similar to how a market maker would work. They're getting similar exposure to what we like to call this kind of baseline automated market maker. And by market maker, I mean in the traditional sense, in traditional finance, option market maker. And what do option market makers do? They provide quotes for options, and then when people buy an option, let's say, like a call option, then they go out and they pick up a hedge against it that's in the underlying in order to track the value of the option that they sold, since it's now become a liability. So they take the funds that they've collected, they finance some of the hedges as well in order to get some, let's say, leveraged exposure. And they start to track the value of that obligation that they now have on their book, which is the option that they owe. They're going to owe a payoff to that option at some point in the future. So the trading pool consists of those options that are being bought and sold. That's the quoting mechanism that goes out. And then the underlying hedges are financed by the LP pool. And in return, they're getting the premiums and trading fees that are collected.
And again, what I think's interesting about this system is, as a retail participant, or someone that just historically would never be able to access or touch these things, not only do they get an opportunity to engage and understand these concepts, which I really believe fosters a sense of empowerment, like just at a sort of human level, but also participate in these systems. You're talking about market makers that would normally fill these roles, that's now opened up to a broader pool of participants. And I think this, again, is one of the things that just crypto is really, really, really good at. And so you have these two pools, right? And then there's a hedging agent that interacts with these two pools and kind of calculates and mitigates risk. And I'm hoping you can just kind of talk about that in a little more detail.
Sure. So the baseline for what options market makers do in terms of hedging is they put on delta hedges. These are also adjusted because delta hedges, they're based on the Black-Scholes model. And the Black-Scholes model has a few issues, mostly in its assumption that returns are normally distributed or approximately normally distributed. So there are some adjustments that market makers in practice make in order for the hedges that are said, that are basically predicted by the Black-Scholes model. So we have these adjustments as well, or at least some of those adjustments as well. And those go towards picking up some of the underlier in order to mitigate the risk. So let me give an example. A lot of market makers will start with the at the money option. So that's basically, let's say we have a call option on a box right now. Let's say it's at $20, and it's going to expire in a month. And for this month, the exposure at this moment of this call option to any increases in the underlying is 0.5. It's a 0.5 delta, they call it. So that means if you hold half of an AVOX, you can at least target locally what the risk will look like of the option price. So going back to this example, suppose that it was $2 the option for this for the opportunity in the future to get any upside above $20. So let's say in a month, it goes up to $22. The holder of that option would get $2, minus, of course, the premium that they paid initially for it. Now, this is a promise that we've sold as the platform, as the AMM. And this is essentially what the LPs would be on the hook for. But instead of just waiting until the end, until that comes to fruition, where it could be $2, it could go up to 100 again in a month, right? And then in that case, that would be a huge liability if you just left it on your book without doing anything about it. So what do you do along this path as Avalaunch changes, as it varies in price? Well, let's say it just keeps on going up and up and up, right? As it's getting up to 100 throughout the month. Then what we do is we start with at 0.5 units of a Vox. So that would be worth in the beginning $10. And then as it starts to increase more, that portion of a Vox that we buy up starts to get larger and larger. So instead of 0.5, if it went up, another 5%, maybe we would get 0.55, or maybe we would get 0.6 of an Vox. And we dynamically target that with the movements of the underlying. And so there's a rebalancing that has to happen in this procedure so that we're tracking how the option value is changing as the underlier changes. And we're tracking that risk over time. So that's how, in a nutshell, it works. And a lot of the time, options will also, depending on what you have on your book, they can help in balancing out some of this risk. So, for example, if the book has both puts and calls on it, and you're kind of balanced in this way, then the delta exposure, the exposure to the underlier, is mitigated. It's decreased. But if we're in a bull market, or if the bull market returns, a lot of people are going to pile on to calls, when they're coming to our platform. So in terms of balancing, this kind of tension that there is between the traders who are picking up the options and the LPs who are providing the funding to manufacture these options, we're providing this kind of intermediate step, this automated strategy of tracking the risks in the underlying that aren't mitigated from our portfolio of options themselves. So how do we go about and pick up the underlier in order to mitigate those? So that's in a nutshell how it works.
Yeah, super helpful. I mean, it's really clear, and very, very cool. And I know at some point, other AMMs, like your traditional like DEX AMM, come into the picture here, and I can always appreciate when protocols will just leverage other protocols, particularly in relation to Avalanche, because I just think it helps grow the ecosystem and kind of brings everyone together in a sense, even. And I want to understand what role other AMMs might play in this system, and when they step in, and how they're utilized.
Yeah, it's a great question. I mean, right now under the hood, we actually are, in order to implement the hedges, we're already interacting with, say for example, Uni V2 AMM through Trader Joe. We're also interacting with, a Banky pool, and we're interacting with GMX. So kind of under the hood, in terms of implementing the delta hedges on chain, we're already taking advantage of this composability and interacting with these AMMs.
Yeah, and I did want to give a little bit of a shout out to another great perp team that's out there on natively to Avalaunch, which is Hubble. And this is something that when we're looking on the back end for creating these hedges, we're trying to develop, this is in a future iteration, a kind of routing mechanism that gets the best prices across the different exchanges for us to pick up these hedges. As we're doing it now, it's where the liquidity is available, and where we can put on some leverage, in fact, maybe in some cases. So that's one of the important things, is how do we create these hedges in the most cost-effective way. And the first iteration that we'll have isn't going to have these optimized routing procedures, but we're hoping in a future one to be able to bring those on board.
Cool. And so, what about the token, right? Where does this all fit in? I think a good place to start is just kind of talking about the utility of the token in general. What its purpose within Arrow is.
Yeah. So when we do launch, we will be launching with a guarded version without the token, and so we had to kind of build a little bit of an additional layer to almost mimic some of the functionality of the token and reproduce it without the token. But fundamentally, what the token does is it gives you access to this insurance pool. So if you own the token, then you can use it to provide liquidity to this insurance pool, which then that money is used to capitalize the hedges in the trading pool, and then this also gives you a claim to a pro rata share of the income generated from those activities. So the token fundamentally gives you access to participate in the liquidity pool.
Mm-hmm. Okay.
And during the alpha, like Patrick was saying, the financing and insurance pool, people will be able to participate with USDC. Once we do have our token out, then what we will do is have it be that you have to come with both the token and USDC and put those both into the pool. And the token essentially acts as an accounting mechanism to see how the premiums and trading fees are going to be redistributed to the people who've contributed to the financing and insurance pool. So that's where it derives its value in this fundamental economic way of both, utilizing, you have to utilize it to get these dividends or to get these premiums and trading fees. And by using it, you benefit in that way.
Mm-hmm. And how far, no promises, but just sort of generally, how far away are we from seeing a token?
Part of that's market dependent, I gotta say, honestly.
Well, that's
so
that's an answer, right?
Yeah, it's an opportunity to really generate a lot of buzz, of course, to come out with a token to create the excitement within the ecosystem. So we're trying to time that right. We've been talking to a lot of advisors and investment partners on when this timing might be good. We're hoping that will be after our alpha comes out, within 6 months from there. And we'd be able to have the full-fledged system running then. But yeah, no promises on that.
Right. Yeah. I mean, there's obviously a lot can come up, and setting the. Go ahead. Sorry.
Oh, I was just gonna say, yeah. I mean, like Ed was saying, we have some flexibility there, and I think there are going to be a few things we're looking at in terms of timing that. But at a kind of from a holistic standpoint, we want that to correspond to scaling the platform. So initially, when we push out this guarded launch, the scale is going to be kind of kept, is going to be held back intentionally. And then as we start kind of working into the market fit, as we start getting more and more comfortable with the workflows, building more and more demand from users, as we're ready to really scale things up, around that time is when it makes sense to introduce the token, because that's when we really want to give people the opportunity to participate in the liquidity pool and kind of participate in this scaling that we hope is going to be happening.
Mm-hmm. Mm-hmm. Yeah, it makes a lot of sense. I think it's a strong strategy. And looking at just kind of here we are, January 2023, with the kind of year ahead of us. I'm hoping you could just give us a kind of a rundown or a general picture of what's coming and when and what to expect. Just in terms of like deployments and marketing, and just for people that are interested in the project and have been following along, give them some insight into what's coming next.
Yeah. So, and I'm sure Ed and Dheeraj will be able to say more, but I know one thing that I'm quite excited about. Obviously, a huge thing we're excited about is getting the guarded launch out. but we will be deploying that with a very limited set of features relative to the number of features that we kind of already have. So we have a lot of things in the pipeline, or even things that we've already built, that we will be rolling out, throughout the year. Things like under collateralized shorting. There are just kind of a bunch of, and also the addition of new underliers. There are a bunch of things that we're going to be able to roll out throughout the course of the year, and so that's something I'm excited about. One of those things that's kind of less, it's less concrete at this point, but something we're working on that's very exciting is the design of kind of an ancillary market for the liquidity providers. We're working with a professor at University of Chicago, Ayan Bhattacharya, on this. He's been really leading this effort, and I think this might be, we may be able to kind of push out also some very creative kind of ancillary support markets for this system within the next year or so. And so, I think we're all quite excited about that. And then one other thing is that I think is very powerful is, so the way we do our prices, we need implied volatility surfaces in order to price these options. And so we're working on a technology to produce the implied volatility surfaces for underliers that are not liquid or that don't have liquid options markets and so forth. And so once we get to the point where we're confident saying, hey, here is a viable implied volatility curve for some tail asset, I think that's going to be very powerful. And that's probably something also that we will be able to get in place during 2023.
Very nice.
Yeah, and there's a ton of great AI tooling that goes into making that extrapolation possible. So something we're actively developing that's really cool. And the way that we're currently thinking about it is from starting with model inspired. So you start with something like that, and then how do you improve upon that? Because we all know that models are flawed. How can we learn from the data in order to do even better? And it's something that you see actively being done in industry as well. There's a lot of tooling like deep hedging from the JPM guys, a lot of increases in the AI tooling. So I think that's also from the more kind of academic and exciting kind of research aspect, the quant level. There's a ton of cool things there as well.
Yeah. Very cool. Very cool.
From the user's perspective, there's definitely a lot of education planned, trading competitions. We've had a few, but more to come.
Yeah.
And we are aware that options are complex. And for the everyday user, there is a lot planned to help them understand options and make options trading exciting on our testnet so that they can practice and then use those skills to trade on mainnet.
Yeah. Yeah, I think, I've observed the education component of your guys' community building and marketing, and I think it's really important. And so, yeah, I would anticipate to see more than that. And I think it's like healthy for the project and healthy for kind of the ecosystem in general. Just this kind of emphasis on education. So really, really pretty keen to see more of that and see it kind of evolve alongside the platform itself. And
a lot more memes too. They're gonna come, Mark, with that education. So many more memes.
Important as well.
We have some JPAL ones coming tomorrow. I'll give you a little hint.
I'm expecting some some set it and forget it memes. It's like the slow cooker of finance. Yeah, I mean, it's been like really, really cool to catch up with you guys and kind of get all of this information sort of in one place. And really appreciate you taking the time to share it with our community. And certainly happy to have you guys back on whenever. I think what you guys are working on is really, really important. and we want to stay really close to it. So as soon as there's a little more to come back and talk about, we'll do it. But in the meantime, I just really appreciate you guys' time and the work you guys are doing and the relationship. It's important to us as well. So thanks a lot.
Awesome. Thank you so much, Mark. Always a pleasure.
Yeah, and thank you for your continued support all our journey.
Absolutely.
Yeah, seriously. That one of this is an insider story, but I'd like it to be known to the public about the generosity of Avalaunch. But when we were at Avalaunch Summit, and we were trying to get our name out there, we were still like a testnet project and everything hadn't launched, but Avalaunch was kind enough to let us share their booth in order to distribute some of our swag and talk to people. So it was so cool. We really appreciated that, and they took us in and gave us some shelter while we were out in the midst of the chaotic. Well, it was a very good conference, but there was a lot going on. There were so many people out there and everything. So you gave us some refuge from that and allowed us a place to talk and give out swag. It was awesome.
That's amazing. That's awesome. Yeah, it's all in the family. It was a pleasure, really. Good company, Okay, well, cool, guys. Thanks again, and you guys have a good rest of your day.